Ever wondered what high-speed day trading actually looks like? Not the theory, but the real-time, in-the-moment decisions that can lead to a big profit? Well, today, we're going to break down a specific scalping strategy that one trader used to make some serious cash in just one morning. So how'd they do it? Let's dive in.
So let's start with the bottom line. $800. That was the final profit for this trader's morning session. And yeah, that's a solid payday for anyone. But what makes it really wild is the time frame.
Yep, you heard that right. This wasn't a week-long investment or even a full day of grinding it out. This all happened in less time than it takes to watch a movie. So, how in the world is that even possible? Okay, here's our game plan. First, we'll take a closer look at that $800 payday. Then, we're going to break down the actual system this scalper uses. After that, we'll walk through the two exact trades that made it happen, one in Devon Energy and the other in Blink Charging. And finally, we'll boil it all down into what we're calling the scalper's code.
All right, let's set the scene. The date is September 22nd. And on this particular morning, this trader executed two very different options trades. One was in the kind of boring, stable energy sector, and the other was in the much crazier, more volatile EV space. But the goal for both was exactly the same. Get in, grab a quick profit, and get right back out.
And this quote from the trader himself really says it all, doesn't it? This isn't your classic buy and hold investing. We're not talking about holding stocks overnight. This is a rapid-fire, almost surgical approach. The whole idea is to use your money, make it work for you, and then pull it out so it's ready for the very next opportunity.
So what's the actual method here? I mean, this can't just be random guessing, right? It's not. It's a very specific strategy with a name that honestly tells you everything you need to know. The trader calls it intraday momentum option scalping. Now, I know, that's a mouthful, so let's just break it down. Intraday is simple. It all happens in one day, no holding overnight. Momentum means you're basically jumping on a wave, riding a stock that's already making a big move. And scalping, that's the key. You're not trying to hit a home run. You're just trying to skim a little bit of profit off the top, over and over again. Now, according to this trader, the real secret to his system is just how simple it is. He says to forget the news, forget all the hype. Instead, he focuses on just three core ingredients: price action, volume, and volatility. That's it. These are the only things that tell him whether a trade is even worth considering. Of course, he's got his tools. He uses a bunch of technical indicators, things like the MACD to check momentum or Keltner channels to spot breakouts. But, and this is the crucial part, these are only for confirmation. The initial decision, the reason he's even looking at a stock in the first place, always comes back to those three core ingredients we just talked about. Okay, enough with the theory. Let's see how this thing actually performs in the wild. Our first case study is a trade on Devon Energy, ticker DVN. And this one was a picture-perfect, textbook example of the strategy working exactly like it's supposed to. So at 9:53 in the morning, the trader sends this alert out. And just look at how clear it is. He's targeting DVN, the strategy is to buy a $30 call option, and he's getting in for 58 cents per contract. The targets are defined right from the start. He's aiming for a 30% profit, but he's got a super tight stop loss at minus 10%. The risk and the reward are spelled out before he even hits the buy button. And the result? It was a winner. In about an hour and a half, the trade was done, and he closed it out for a $350 profit. The system worked. Simple as that. But hey, trading is never that easy, is it? The second trade of the day, this one in Blink Charging, gives us a really fascinating look at what happens when things don't go to plan and how a trader has to think on their feet. This is the moment that every single trader dreads. Just minutes after he got into the Blink position, the price just plummeted. It blew right past his stop loss. The system, the very rules he lives by, were basically screaming at him, "Get out, take the loss." So what did he do? He held on. But why? Why would you break your number one rule? Well, this is where experience and a little bit of intuition come into play. The trader broke his own rule because, as he put it, he knows the stock's personality. He's traded Blink for years, and he knows it has this tendency to be super volatile, to swing down wildly right before it takes off. It was a judgment call. He decided to hold on. And that incredibly risky decision, it paid off. The stock completely reversed course, and he ended up closing the trade for an even bigger profit than the first one, $450. It's just a powerful reminder of that tension that always exists between sticking to a rigid system and trusting your gut. So, after seeing these two trades, one that was perfectly by the book and one where the book got thrown out the window,
What are the big takeaways? Let's try to distill this whole strategy down into a simple set of principles, the scalper's code.
First and foremost, the system has to come before your psychology. The trader really emphasizes that his strategy is a quant-type system. That means the rules are the main driver. Your emotions, your subjective feelings, they have to take a back seat. Even though, as we just saw with Blink, sometimes they do come into play.
And now for what is probably the most crucial point of all, and this is in the trader's own words. This is not a game. He is very clear that trading options is extremely risky and highly speculative, and if you don't know what you're doing, you could lose pretty much all of your money. That context is absolutely essential.
So, the code really comes down to this. The rule-based system is king. Ignore the news, he says it just makes you late to the party. Really understand the unique personality of the stocks you trade often, and always focus on those three core ingredients: price, volume, and volatility. And finally, the whole point is to use your capital efficiently. Get in, get out, and get ready for the next move.
And when you put it all together, this is what that morning looked like. A $350 win from the textbook Devon trade and a $450 win from the much more chaotic, rule-bending Blink trade, for a grand total of $800.
Which of course leaves us with the ultimate question. Was the Devon trade a sign of a repeatable system and the Blink trade just a lucky break? You know, the trader himself admits that sometimes the trading gods are on your side. It really makes you wonder, can a strategy like this ever be purely systematic? Or will it always depend on a little bit of luck and a whole lot of skill? Definitely something to think about.